Hi, Mehdi Sundaji, and welcome to Your Finance TV's Crypto Revolution, where we cover all things crypto and digital assets. And as usual, there's a couple of topics to talk about in the world of crypto. Adam, welcome back.
Hey, Mehdi, good to be back. I'm standing way too much sitting over the holiday time, way too much eating and sitting and drinking and all that. So standing up, and as you said, we're not at a loss for things to talk about, starting the year off a little bit crazy in the crypto world.
Absolutely. Well, Happy New Year, Adam. Yeah, sorry, I didn't greet you with the obligatory Happy New Year.
Happy New Year to you, Mehdi. We got another month of Happy New Year's in us.
That's it. Welcome to the Crypto Dome for 2024. So, Adam, before we dive in, don't forget to like and subscribe if you want to stay on top of our content. And that's to you and everyone else watching, Adam. But we are through 10,000 subscribers. So, thank you very much for all your support in 2023. We look forward to bigger and better into 24. But without further ado, we should just dive into the hot topics du jour. And as we come into filming, it's Wednesday, I believe, Wednesday, January the 3rd. There's been some volatility in Bitcoin. We've seen it rising slowly but surely over the last several weeks on this ETF frenzy, which the approval is set to hopefully potentially come by January the 10th. I had an internal bet that it was going to be announced today that it was approved, but that was just me. But the SEC, there was a rumor, sorry, not a rumor, there was a report by Matrix Port this morning, early doors, where they said SEC will reject all Bitcoin ETFs in January. And on the back of that, we saw Bitcoin and obviously all the other crypto assets come off quite rapidly. I think Bitcoin was down about 10, 12% at one point, but it's since slowly trickled back higher. So, Adam, what do you think? Was there any meat to this story, or is this just some guy sitting in his mum's basement banging out a report trying to get some volatility in this thing?
What we've seen, and I've been, kind of scouring everything I can, is there's absolutely no validity to this report. It's someone who said, hey, there's a chance that these might not get approved because all of these issuers have not fulfilled one, obligation that the SEC set out, and therefore the SEC is just going to, blanket reject them all. Didn't even mention what that one thing was. And if we kind of follow on Twitter X a little bit after that, when Eric Balkunis from Bloomberg was questioning him and saying, basically, do you have any data? Do you have any information? Do you know someone? And he basically, this guy, basically, Marcus Thielen is his name, basically said, no, I have no inside information. I have no information from the issuers. I have no information from the SEC. This is just what I feel is there's a chance or there's a greater than whatever 50% chance that this gets rejected before the 10th. So basically no data, no information, no insider information, nothing. Just kind of thought that, and it got published in The Block, which is one of kind of the three main crypto media sources. But again, The Block published it without any basis, just saying this guy, this is what he thinks. And as we see with crypto often is people read that news, they go on X, whatever, they read something, they start to sell, and we see this volatility trickle, cascade through. And we've talked about, we can go into details as to why there is all this volatility when something like that happens, but that's kind of what we've seen. And to my knowledge, there hasn't been anything validating his claims. As a matter of fact, from what I read, the SEC is actually having meetings with CBOE, with NASDAQ today to make sure the exchanges are ready for an ETF approval. So I can't imagine that they're going to do that and they're not going to approve the ETFs.
Well, that's an interesting point there, and I'll come back onto the CBOE side of things. But over the last several weeks, we discussed this last time we spoke as well. There's been a lot more two-way interaction between the SEC and the applicants, right? Where it hasn't just been a radio silence situation. They have come back and said, we'd like you to address this, this, and this, whether it's authorized participants, so BlackRock and Valkyrie came out and they named JP Morgan for Bitcoin, their authorized participants for the ETF. There has been question, answer, right? Or addressing, right? So
Right.
everything's been productive over the last several weeks and months that I've kind of witnessed in the news flows and everything. So it seems very surprising that they would just come out and say, no, it's been denied, right? They might find some special dispensation for an extension past January the 10th. Who knows? I don't know. But um, as far as a flat out denial, I personally would be very surprised. And then, you mentioned the CBOE side of things, right?
Right.
The digital president, he came out in regards to an ETF approval, and they're addressing the growth in the derivatives market, right? And they're getting themselves prepared for this side of things. So, yeah, Adam, what do talk us through what you're seeing on that side of things, the planning for an approval versus a denial seems to be far more outweighing than in actions versus words.
Oh, yes. I think the actions we're seeing, and again, I'm not an expert on ETF approvals and the ETF process or anything. I follow people who are, and they all seem to be saying that everything they know and everything they know from past ETFs that are not crypto related. And this one says it looks like we're aiming for any time between January 5th and 10th. And we have to look at this. I don't think the SEC has the leeway to extend it anymore because of the ARK deadline, the deadline on the ARK 21 shares. If they were to extend it for some reason, I have to imagine, or if they were to extend it, or if they were to deny it, the number of lawsuits that would come down against the SEC would be overwhelming. Again, in an election year, there's no way that the SEC governors, there's no way that Gary Gensler keeps his job a week if he denies that, because the number of lawsuits, the amount of money that the SEC is going to have to expend just to fight all that, to fight BlackRock and Fidelity and Franklin Templeton would be enormous. And I don't think that Congress is going to allow that. They're not going to allow that money to flow to the SEC just to fight because, Gary Gensler has this thing against crypto. On top of that, Mehdi, you mentioned even when we talked about Jamie Dimon and his talking about how if he were part of the government, he would ban all crypto. But then JP Morgan comes up as one of the authorized participants for BlackRock, right? So even JP Morgan is in. They're ready to go. They're ready to make a ton of money off of this. So everyone's ready to go. Every bit of action we actually see says approval is imminent. Again, SEC meeting with the exchanges today. CBOE is saying this is going to kick off more derivatives markets because people are going to have to hedge. They're going to hedge against the price. Honestly, it will probably tamp down volatility a little bit because you're going to have more participants, more money in there to be able to keep these huge dips from, potentially from happening. But there's so much interesting going on here that shouldn't be all that interesting, right? It should be relatively boring. The ETF gets approved, and then we all, everything happens exactly as we thought it would, but someone had to throw a wrench into it, which, I guess, Mehdi, I think it was yesterday, Jim Cramer of all people came out and said, look, Bitcoin's got legs. It's not going away. And then we see this, the infamous, inverse Jim Cramer trade happened, even though he had very little to do with it.
So it's funny you say that. That was my absolute first thought was, oh, wow, Jim Cramer came out and endorsed this and Bitcoin pukes 10%. So I put it 100% down to him. And then obviously further exploration kind of highlighted this report that was out there. But it was very comical. That was my thoughts exactly. And, a friend of our video series is Matthew Tuttle, who was the guy who actually created the ETF, the Jim Cramer short ETF. So, shout out to him. He also did the inverse Cathy Wood, the anti-ARC, the SARC inverse.
Okay.
So, we should probably get him on board to get his thoughts about the ETF world on the Bitcoin side. So,
right. And to cap off a little bit, Mehdi, because you and I haven't talked in a while, thinking through this, there have in the last few weeks, we've seen obviously, some decent moves in Bitcoin and crypto. As a matter of fact, when we woke up January 1st, Bitcoin was at 42.2 or something like that, went all the way almost to 46, I think, yesterday, and now has come back to 43. So even with that huge move down this morning, Bitcoin is still up for the year, right? Even with that, because it was up big. But with all that, we saw big, positive moves in Bitcoin mining stocks, publicly traded stocks. Obviously, MicroStrategy was up big. Coinbase was up big, and they've all since, really sold off quite a bit. Part of it was on this move. Part of it, I think, was people just profit taking at the end of the year and not quite sure what the impact of a spot ETF will have on these companies. We're not quite sure all of these metrics, right? We just, anyone who thinks they're an expert on crypto and what's going to happen to the price, there's no such thing, because we just don't know. We don't know what the inflow of ETF money is going to do. We can have theories, and that comes with understanding how Bitcoin works and how the markets work. But that's all we really have, because there's not enough, there's no historical precedent for a Bitcoin spot ETF and what that does to the market and what that does to MicroStrategy and Bitcoin miners and Coinbase. We just don't know.
I don't know. Michael Saylor fancies himself as a bit of an expert.
Well, but look, and you and I have talked about Michael Saylor and some of his, relatively crazy remarks and things like, mortgage your house and buy Bitcoin or something like that, which in retrospect turns out probably would have been a good idea financially. It doesn't mean it's a good idea that you should do it, but financially it probably would have turned positive. But what Michael Saylor has is an investment thesis, and he's not going to get shaken out by matrix port guys' analysis, right? He has an investment thesis. And so whatever you want to say about him, he says, this is going to be positive. Here's my thesis. Here's why I'm doing it, to the point that I believe he's selling with like 315,000 shares of MicroStrategy now to go buy more Bitcoin personally for himself. So he's actually hurting the stock price of his company so that he can go buy more Bitcoin. Right. So at least he has a thesis. And that's what we tell people, advisors, financial professionals, is have an idea. And then when you see news like this, you can understand how it works. But you can also go, did this really affect my long-term investment thesis? No, it doesn't.
Well, and I think, something I just want to add on to that, Adam, as well. We talked a little bit off air about this as well. What I would say is try and stay away from the whole leverage side of things, because when these types of events do happen, you're a little bit more prone to be a bit more relaxed and less concerned that you're going to get shaken out because of something like this type of report, if you're not over leveraged to the hilt. So just be wareful on these types of investments, that you're not putting yourself in the red in too much risk. And I would reach out to a financial advisor to learn more.
Yeah, exactly. And that's what we try to teach, and that's what we're trying to play today, is get out there on media and everywhere else and go, look, if you understand this is unfortunately a little bit of how it works. There's this volatility, and it comes from being a 24/7, 365 asset that gets traded all over the world with different rules elsewhere in the world, different regulations in terms of leverage. So we see these liquidations, and it's just part of how crypto works. It's part of being in that kind of asset class. And you can go, I don't like it, or I really love it because it's kind of pure capitalism, that we don't have circuit breakers or anything like that. But it's just part of it. It's a reason why you don't allocate 100% to Bitcoin while you have a small allocation. And it's also a reason why you understand it and set expectations.
That's it. Now, all right, we don't want to turn into Bloomberg TV and just keep discussing the ETF and the implications of it and what's going on. So we're going to have a couple of other topics here as well. One of the things I wanted to touch on, Adam, was Immutable and how they launched this interoperable, I can't even say that word, an interoperable tool between their video games and the marketplaces and such. So it's kind of cool, right? So they've launched this Web3 Gaming, a passport, which allows players to use their identities across different platforms. And this to me, I don't understand all of the nuances around everything, but it sounds very cool that I can take my character from one thing to the other thing and just keep that consistency from different games. What are your thoughts? What are you seeing?
Mehdi, I think this is part of the adoption that we talk about with regard to crypto and Web3 and everything, is the fact that if we go back, the idea that Immutable X kind of built this platform that says I can own my assets that go into video games. I can own my identity in these video games. And just like we see in the financial markets, just like we see with all sorts of data, to this point, everything's been very siloed. My data regarding what I spend on Amazon is kind of siloed within Amazon. My search data is siloed within Google, and my bank data is siloed within my bank. And part of what we want with Web3 and crypto is you start operating on this kind of global decentralized database. I can actually own and control my data and decide where I want it to go. So if we move that over into gaming, you have kids, I have a kid, they play these video games, and when they move from one game to another, I have to re-up, I have to buy more, iTunes stuff, I have to pay more money, whatever it is, because whatever they built up in one game doesn't transfer over into another. But if you can go, look, I'm going to play one game, I'm going to earn I'm going to earn some sort of asset, I'm going to earn weapons, whatever it might be, and I can move that to another game, all of a sudden now I have more control, and the building I think that can go on within games, and I'm not a big gamer anyway, but the building that can go on with games is really interesting and cool. If you go, oh, well, so and so has already been playing these other games for a while, and they built up axes or cars or whatever it might be, and that can now translate into our game, and we can start, already at this higher level. We don't have to get people to build up to it. That's really cool, and that's really great. And I think it's really interesting that Immutable has built that, because that's what we've been wanting from kind of Web3 or crypto gaming, is the idea that once you built it on this decentralized database, now I can own my identity. I can own my assets that move from game to game. And I had a conversation a few weeks ago with three gentlemen that are teaching crypto courses to financial professionals in Turkey, in the Middle East, and in Europe. And they all tell me, especially in the Middle East and Turkey, gaming over there, crypto-related gaming is huge. And so, yes, maybe in the US it's not as big a deal, but over in the Middle East and Asia and such, crypto-related gaming is huge. So for Immutable to build this, for people to be able to have their digital wallets and have their assets, that they can control and move from game to game, this is a big undertaking, but it's what we've been wanting from Web3 gaming.
So we now going to see someone go from a Star Wars game to a Sesame Street game, and suddenly Kermit the Frog's got a lightsaber and he's going nuts on Big Bird.
That's exactly how it should be, right? Like, I should get to choose what I want my Kermit the Frog character to do. And my
Exactly.
Kermit the Frog is going to be a Jedi.
That's how it should be. But it's interesting you say that on the gaming side of things, and like Web3 and NFT development seems to be kind of garnering a lot more interest again as well. And our friends in China, they seem to be focusing on it as well. And China's been in the press, obviously. They banned crypto for the most part, but they're turning to NFTs, and the Ministry of Science and Technology said it was a big focal point for them. So this ties in, Adam, with your comments about Turkey, Saudi, and Asia, right? So there's a lot of gaming that's to be had there.
Exactly. And what we saw was China officially, quote, banned crypto. But people had turned to NFTs, and they said, well, you haven't banned these, we're going to turn here. But now China's saying, okay, we just need to put some rules around this. We need to foster this innovation. This is going to be a big deal. We have the most people in the world. They want to do this. We're going to make sure that, of course, being China, we're going to make sure that they do it the way we want them to. And if we try to ban it and they fight back anyway, we might as well go with it. And we might as well put some regulations in place. We might as well put some guidelines in place so that we can be a part of this innovation and maybe even drive it a lot more. Again, because of being the most populated country in the world, we can actually drive that innovation in NFTs and in Web3 gaming and all those parts of adoption, Mehdi, that we don't talk about as much because it's not a Bitcoin spot ETF. But those are going to be the parts of adoption that are actually going to drive crypto and blockchain technology. It's not going to be you and I trading Bitcoin. It's not going to be ETF issuers. That is window dressing at the moment. That's going to get us a few more steps in the West. But in the East, in the Middle East, in probably South America, it's more about real adoption, real payments, gaming, ways that you're going to utilize a decentralized database that is not just creating a financial asset and trading it back and forth.
Bring on the adoption, Adam. I love it. And I'm looking forward to seeing more and more developments in these NFT and Web3 developments. So we will stay on top of things. Adam, as always, I really appreciate your thoughts.
Really appreciate being here, Mehdi. And, next week should be another wild one. So looking forward to that conversation as well.
Definitely. I wonder what we'll talk about then. But for our viewers ahead of next week, don't forget to check out Adam's course on digital assets and crypto education. The website's down there, interaxis.io. And of course, don't forget to subscribe to Your Finance TV. Until next time, thank you for watching and good luck investing.